just another weekly forecast session. What we will be doing is we're actually looking at our top-down analysis again for the week ahead, and we'll basically start just by looking at the monthly, just to show you exactly what our initial understanding should be in regards to structure. Now, obviously, this is something that I do myself personally on a weekly basis, just to see where the market is and to see exactly what has happened, and just to refresh myself on what is the continuation of the market trend so far. So what we did speak about a few weeks ago was, obviously, we've got the lowest of the low that was created in 2016 here. COVID was obviously utilized to kind of spike down into that March 2020, and we were retesting that in the previous couple of months. So we saw the market come down in May. It came down, tested the demand zone here, which was the wick that kind of created the leg out. And then obviously it rejected down further. Then we were targeting the inefficient wick down here. And if we pull a fib onto this, we can see that the market has now taken and tested 50%. It didn't previously, which is why for us personally, the 50% is necessary to be mitigated before we kind of start deciding on whether we're going to change directional bias or not. So on the higher time frame monthly, we're looking at 50% being tapped on the COVID liquidity spike. And now we are seeing a rejection from that zone, which clearly we can see with the indecision candle that's been formed. A very big monthly rejection has taken place the previous month. We're now running into August as of this evening. And what we will now be doing is we'll step down to the weekly and we'll see exactly what has happened. So obviously a couple of weeks ago, the market came down, spiked, touched demand on the lower time frame that was left down here, which formed the leg out to kind of come up. Slight bounce has occurred. We've got obviously a rejection wick that was formed due to this in the previous week. So effectively 1, 2, 3, 4 candles. That is the monthly candle that we were looking at in terms of a rejection wick. And then we step down lower onto the daily and we see the level of demand that has been created as the market now goes up. And yes, there's a lot of demand that has been marked because all of these were inefficient wicks and all of these played into liquidity for the push and bounce up to short-term supply. And we can see the supply that was left behind here. The market came, created equal highs, liquidated that, and we see a slight reversal in the inefficiency that's now been created, liquidity lying all above us, and we're going to see exactly what the market decides to do. When we then flip down onto the 4-hour, we can see how the market has come, consolidated in supply, taken supply, respected, slight rejection, back up, equal highs left behind, liquidated here, and then rejected down again, respected the demand that caused the leg out to get to the liquidity grab, and then it's kind of continued to respect that demand and moved out of the zone. Come up, supply here was respected at this point. The market then obviously consolidated, blagging early sellers into the trade. When they bought into the trade, it then liquidated them, moved out, spiked high into the fair value gap that was left behind here, below lower time frame supply. And now we've got a rejection wick that was formed that is our supply now, that kind of resulted in this rejection down into demand on the lower time frame. So again, we're looking constantly at what's happening on the higher time frame, the liquidity that the market is leaving behind, and the supply and demand on both the higher and the lower time frames. So now when we get into this current week, we'll flip down onto the 1 hour and we'll see what the market has done. Let's see if we can turn some of this stuff on. So we've got fair value gaps and we've got Asia sessions. Okay, so let's see if this actually works. Dailies. Right, so Monday of this week, we obviously had a buyout. The Asia session kind of respected demand and then it kind of bought out, liquidated highs, equal high was liquidated here, continued to break high, took all of these highs that were sitting along this level up into supply at this point here, which caused a leg out and continued to drop. And then the market kind of bought down into Wednesday, demand, and then up for the rest of the week. So categorically characteristic of GU. Monday goes one way, Tuesday, Wednesday, Thursday, the opposite direction, and then Friday rejection. So what we're now looking at is where is supply being left, and we can see that when the market tapped up into this level here, it has taken interim supply at this point because it took these lows in this supply zone. That was a supply that was tapped up into with this rejection wick. The market rejected out of that, nicely sold for about 90 odd pips, respected the demand that caused the leg out. I believe this was FOMC news. And then obviously it's bought out of that again to then continue a push, possibly to take the supply higher up. What we're now going to be looking to do is see whether these equal highs that were left behind here get liquidated in Asia, we've got two supply levels that we've marked up, and now we're going to turn on the magic and get our key levels up on the chart. Okay, a lot of craziness is going on as always, but let's look at it in context. So if we zoom into this, we'll then be able to see exactly what has happened. So we can see where the market rejected out of. We've got supply, volume was put into here, big leg out, bearish imbalance created, market consolidated, equal highs left behind, and then we kind of dropped down, took a key level on the market profile in this demand here. The demand was respected, the key level was not taken. The market rejected out of that. Again, another key volume here. Why? Because the market then bought out of this with huge volume, leaving behind imbalances and volume spikes as it goes up. Consolidation then obviously was here, continued to push. We've got the weekly pocket at this level, daily pocket at this level, a 31-0 bullish imbalance sitting at this point. That obviously was the stop for the market rejecting back down into this fair value gap. And the market now obviously closed with equal highs at this point, where people probably were selling down, and possibly now duping people to sell early. Now we're going to see how Asia opens. The zone that we're looking at the moment is this area here. We want to see exactly what the market does and how it opens in Asia, whether it kind of comes up to target liquidity that's sitting above here. We've got a bearish imbalance that was created for this leg out down here. Supply sitting above this with a key level volume spike. So a lot of orders are put in at this point here to kind of push the market down, take all this demand sitting down here, move down, take liquidity again, consolidate, take Asia lows, and then push down, took out early sellers here, and then continue to push. So the levels that we're looking at are below us. We've got bullish imbalances and key volume spikes that kind of held the price up at this point to then continue bullish. Hasn't had much of an effect because obviously tail end of the week. We'll see how Monday opens and how the supply and the demand on both sides of the market then get played. We will have to see how Asia POC obviously plays out. I'm not going to be looking at the markets on Monday, but Tuesday obviously we'll reference that in. We have an imbalance pool below us, sits within demand as well, and between two key levels. So when the volume spike was pushed out of here, there was a lot of orders put in here that were unable to be filled. So the imbalance pool itself as well acts as demand. This is termed a larger demand within a smaller demand. And that's because we had consolidation, rejection, volume orders, buy limits were put in here. The market bought out aggressively. And then obviously the imbalance pool was left behind because the market could not keep up. Bullish imbalance on the way, key volume spikes on the way. Again, another key volume here because when the market started to reject down, it then bought, there was buy limit orders here that bought the market out, prevented it from selling, and then pushed the market up, which is why we have imbalances and key levels at this point as well. So the most volume of the week was put in at this level. If we go across the week, we can see that the most consolidation and liquidation occurred in and around this level, which is why we've got the weekly POC and daily POC very, very close to each other. We've got liquidity above us, bearish imbalances above us, which actually caused the sell from the point above. Short-term interim supply that obviously stopped up into this supply as we spoke about previously. So if you go across, it was this zone here that took these lows that supply stopped at. We do have bearish imbalances above us. We have a weekly POC from many, many weeks ago, the end of June, another 4 or 5 weeks ago that is still sitting above us, which could act as a very good catalyst to kind of sell down and target liquidity below. So again, we're going to wait to see what happens, see how these levels get respected, see how the market reacts to certain levels, to then wait for the confirmation to take the trade. A very quick session. I'm not sure how long it's going to be. I'm using a different format to record now, and I don't have a timer on this, but hopefully the quality of these videos are better than they were previously, and I will be in touch and communicate with you guys on Instagram and social media, YouTube comments and the like. Like, comment, subscribe as always, pass it on to people that you think it'll be beneficial for, and hit us up on social media, Instagram, for any information on why we are saying what we are and how we're getting the information that we are. Obviously, more information is always available in the Discord. A lot of people, we're up at 45, 50 members now, thank goodness, and they are doing amazingly well. Some people have been in there 2 or 3 weeks and they have completely changed their trading, which is exactly what we say. Trade smart, don't trade blind. Trade like number 4. TVT is the only way to learn to do that. Take care, guys. Speak soon. Bye.